Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics, subjects, sectors, looking for investment opportunities and sharing those opportunities with everybody in the community. And I do that, well, I'd like to think I do that through a more of a sharing, teaching perspective than I am just showing opportunities. I'm showing you how I get there, what I'm using um, in the markets to determine my decisions, my opinions about the companies. I generally look through all the presentations of the companies on their websites. I know the programs or the projects that a lot of these companies have, and then I make a decision based off of not just the projects, but are they making cash? Is it going to grow? Is it a project where they need money and they don't have any? Stuff like that. And sometimes there's risks that I do take, and I let people know that, hey, this company is risky. We're at the bottom of the market. They are losing money, and they do have debt, and that's a two-sided coin. Um, One, it could provide you an entry at pennies on the dollar, but on the other end, if the commodity price or whatever doesn't come back, neither does your money. It leaves you. They can go bankrupt, is what I'm saying. So there's a lot of those things that we go through, and hopefully I am communicating that well enough with the people in the community. We've had a lot of very good success with a lot of the website's picks. So things are looking pretty good this past year and even before that. If you're interested in signing up and becoming a part of the community, specials the coupon code. It is $25 for the first month only. On the monthly membership, it's 50% off, which makes it $50 a month afterwards. Then you could sign right up to the yearly membership with a $100 discount. So you could do the monthly, get a 50% discount, try it out, and then swap to the yearly membership and get a $100 discount for the yearly membership, which has further savings than the monthly. So JC Parrots says, I know it's not cool these days to remind everyone we're in a bull market. Some people like to pretend they sound smart by being a cynical AWOD on Twitter every day. But maybe take a look at the All Country World Index, excluding the United States, closing the week at its highest level in history. And that's the All Country World Index, excluding the United States ACWX. And let me yank this up. ACWX. And there it is. It looks like it only goes back to where he's got it. I like doing the big picture view. The bottom of the cycle for the United States was 2009, and we are breaking out of that cycle right now. So that looks fantastic, and this is generally when commodity bull markets start to take off, and energy markets and precious metals markets. They're all interconnected, and that took me a while to figure out this cycle. The real estate cycle is one of the things that can drive this. Um, the real estate cycle went into a recession here and bottomed, and then now I think we're coming out into more of an expansionary phase from I'd say somewhere in this region here is when we started to enter the expansion phase, where we started to grow more and more real estate, new homes, which cause more bank lending, and then money starts to come into the system. Inflation comes, interest rates go up, and then when interest rates hit, I'll say more of a critical level. I'd say about 4.5, 5%. You guys, I'm sure, have been watching the U.S. 10-year yield hitting that. It's just so weird that we paused right at that level, isn't it? Isn't that just weird, right? And Besant, of course, comes out, well, probably going to hit it down below 4.5%. But I think this will break higher. And then you'll get that big commodity precious metals bull market that we've all been in and waiting for, and the continuation of it. So it looks very good. Coming down, it says, Charlie Munger, if you want to succeed in investments, start early and try hard and keep doing it. All success comes that way by and large. I wanted to make a comment about this. This is the state, this is how I view most people, and I went through it myself as a retail investor. You get introduced to investing, you get interested, and then for some reason we all get sucked into penny stocks for a period of time. For whatever reason, we think that it's cheap, we think that they can go up a lot, there's a lot of volatility, we can get rich very quick. It seems like a lot of people start in the penny stocks. Then we wise up and say, you know what, these companies are garbage. Then we start to go after other things. We start learning about the companies. We start going after maybe more speculative bets. Kind of like there's this project, there's this company that's going to build XYZ. And a lot of people, they evaluate it based off of the future potential, whatever that thing could be. And they see the big potential, but maybe not so much the risks. So a lot of retail investors, they migrate from penny stocks or never migrate away from them into these speculative junior companies, which are still far too risky. Some people may still continue to come to the realization that maybe my portfolio shouldn't all be in junior mining companies. And then they start to migrate more towards less and less risky investments. Charlie Munger would say, protect the downside more so than focusing on the upside. And that's why I'm using his quote here, even though it's not directly related to that. What a lot of people are doing is they're not looking at the downside risk. They're not looking at the downside risk. Now, there's ways to mitigate downside risk, trying to get them in cycle, trying to get it where money flows are coming into those companies, good technical chart setups and patterns. But that's not going to protect you always, because there's always that risk that's lingering in the back that they don't make cash. They need money. They need you as an investor, and they need your money to come in there and support company and or their lifestyle, depending on what kind of company it is. The cash flow generating companies just aren't getting enough love from the retail investors. And that's where all the money's made. That's where all the money's made, in my opinion. So just keep that in mind. Adam asks, which is worse fate for you personally? Well, see, I have a philosophical thing here. Living without enough money, living without purpose. Well, if it's for me, I try to save enough money where that doesn't become a problem. But living without purpose, well, that's very subjective. That's all made up by the person themselves, right? Um, Purpose is all just it's all self-defined. So that's tough. And I have a very different outlook than maybe most people. I'm not super religious. Um, I try to find comfort in knowing what maybe the truth is and how I come about to finding that truth. But I guess the purpose would be living a life that those that are around you, making everyone's life around you better, including yourself. That's what I'll say. And you could say it's family, you could say it's friends, you could say whatever it is. And that purpose, it may not aggregate up into a higher purpose like a religious one or whatever else. But I'm not too worried about living without a purpose because I mean that's kind of all self-imagined to some degree. We are, life floating around a speck of dust. We're a speck of dust floating around a star in a solar system. And then to have the audacity to think that we are some sort of center of everything, I think is kind of overblown, is what I'll say. Eric Hune says, yikes. Breaking Target stock down minus 40% to its lowest level since 2019 due to slow consumer spending. Recession indicator. I'm surprised anyone still shops at Target. I mean, I was there maybe a few years ago. In all honesty, guys, if I were to measure success in my life, and I'm going to come off like a total dude here, all right? um, what I do is I park the car outside of like a grocery store. And if someone were to like put a time limit, like a timer on, let's time this thing, I'm trying to get in and out as fast as I can. I want to be as efficient as possible to not waste my time shopping at a grocery store. Or I don't even shop for clothes anymore. I don't even buy clothes anymore. I still wear clothes that I've had for like years. Um, so I would be happy if people just said, you know what, the faster you get in and out of this grocery store, the more efficient shopper you are. Like I'm good with that metric. Target is total garbage in my opinion. I'm surprised that anyone even still shops there. I look at that store and I don't know what I'd even want to really buy in it. And it's not like if you buy food, then it just becomes what's the best value I can get, and Target's not the best value for food. So I'm sorry, I don't really ever shop there, um, if ever. I barely shop anywhere, guys. It's like grocery store and that's it. Silver Ape King, $50 is a relic. If you think silver and gold have been going vertical lately, you haven't seen anything yet. Michael Oliver, October 2nd, 2025. He thinks we're going to really take off in gold and silver. That very well could be the case. Maybe they're going to go print a bunch of money. I'm sure that's probably the case. Do a bunch of stimulus around the world. I think Japan's doing stimulus now. I know China's doing stimulus. We'll probably do stimulus here. I don't know what they're going to name it. They had like QE twist and QE this and uh, yield curve control, and I don't know. They make up all these stupid names and just excuses to print a bunch of money and buy bonds and control the interest rates, and but we don't have a managed market at all. We do not have a managed market. We just control 50% of every transaction through the dollar and the value of the dollar, and then interest rates is what backs it. That's all we're doing. No one look here. We're just controlling what everyone uses in half of every transaction that dollars take place and the value of those. Coming down, common sense investor. Warning, Warren Buffett, one critical piece of advice during a stock market bubble. During the dot-com bubble, Warren Buffett was asked about stocks skyrocketing 100 to 200% in a matter of weeks. His response was a timeless reminder. We've had a lot of speculative activity and all kinds of things over the years in markets, and it frequently doesn't come to a good end. But it will be with us 100 years from now, just as it was 100 years ago. There's a lot of action, and people are day trading and that sort of thing. I have one piece I give is don't do it on borrowed money. Buffett warned that many people eventually get wiped out because stocks don't go up forever. Valuations can become extreme, and if you're leveraged when prices fall, you don't get to play out your hand. You're seeing similar speculative surges today in sectors like quantum computing, nuclear, and flying cars. Whatever you do not gamble with borrowed money. One bad day is all it takes to end the game. That's his opinions. Louis Gav, one of GavCal's key themes this year has been the rebuild of Fort Monroe, a U.S. that refocuses its foreign and economic policies towards Latin America. This, we argued, would be very bullish LatAm debt and equity markets. But after an impressive performance in 2025 for the region's debt markets, is the trade done? Last week, I caught up with my friend, Okay, so One of the things when we get into these currency exchange rate movements, if we see, for example, the Brazilian real versus the United States dollar, see how this is doing a double bottom and it's about to head higher? One way that you could play this is with Brazilian reals debt. So you go and you buy bonds in some of these appreciating currencies or currencies that could be strong. And then you can collect dividends or interest payments from the debt, and then it will rise as the currency goes up. So that is one thing you could do if you wanted to. That is a possibility. And they were talking about that and how LATAM debt has been going up. This is really a weak dollar play. Lou Simpson, cut your losers, let your winners run. This is what people don't do. So let's talk about what people don't do. It says you can only know so many companies. If you're managing 50 or 100 positions, the chances that you can add value are much, much lower. So far this year, we bought one new position and we're looking pretty seriously at one more. I don't know what we'll decide to do. Our turnover is 15 to 20%. Usually we add one or two things and get rid of one or two things. Warren Buffett used to say, you should think of investing as somebody giving you a fair card with 20 punches. Each time you make a change, punch a hole in the card. Once you've made your 20th change, you have to stick with what you own. The point is just to be very careful with each decision you make. The more decisions you make, the higher the chances are that you will make a poor decision. One thing a lot of investors do is they cut their flowers and water their weeds. They sell their winners and keep their losers, hoping the losers will come back even. Generally, it's more effective to cut your weeds and water your flowers. Sell the things that didn't work out and let the things that are working out run. This is what people do. This is how they name it. Oh, well, how come you're not trimming profits? AKA selling your winners and keeping your losers. It's exactly what you don't want to do. In fact, you should be cutting your losers and feeding your winners. What I call that is kill the dogs and feed the lions. Feed the lions. Water the flowers. Kill the weeds. People have it backwards. So when people say, and I don't trim my winners, guys, I let them run. That's what they haven't learned yet. That is a huge lesson. I make my money, my big money, by letting my winners continue to run. And and I know it's difficult for a lot of people to average up into positions. I call that buying into strength. Buying into strength. If you're going to try to get a bottom, you go in real light. You don't go in real heavy. Then you wait for it to kind of start gaining momentum. The charts start to break out, and then you add in size into strength. That's what I would say there. Coming down, DBC monthly. Commodities are on the verge of a major breakout while rate sensitives are puking. Yeah, that's exactly what I'm seeing too. DBC is the Invesco DB Commodity Index. Looking good. Copper tried to break $5.30 three times and failed. But look at the trend line. Every dip gets bought higher. Supply problems are meeting demand explosion and price is the release valve. He thinks, there's the uptrend that we've got for the lower or higher lows, I should say. JC Parrott's the energy sector index broke out to a new 6-month high this week as stocks that no one owns continues to dominate market returns. Yeah, this is going to be a big one. I think I'm getting pretty excited about energy. I have a big position in energy, precious metals and energy, and then there's other commodities that I have exposure to. But this one I am very excited about. The further you look into the future for energy, the muddier it gets. A lot of people will say, we'll just, technology will just continue to pump out oil and pump out nat gas. Technology will save us. Well, I mean, I'm just going to say this. We are mining oil out of sand. We are trying to come up with technologies to get it out of sand. We're drilling miles underneath the ocean to get this stuff. You think that means it's plentiful? Do you think that technology will overcome geological constraints or geological depletion? I don't know. I look out 10, 20 years and I'm like, I don't know if we've got enough oil out there. When you look out past into the 2030s, I don't think demand's going to go down. I think demand's going to continue to be going higher. I think we'll use every single drop of oil that we can get. And I think that you need to get as bullish as you can when everyone else is still bearish. That's the best time to be bullish, is what I'll say. That's what I've learned through all my years of investing. We are facing a major electricity shortage. Speaking of energy, the U.S. will need 69 gigawatts of power for data centers between 25 and 28. Dude, that's 3 years from now. 3 years. Only 10 gigawatts of this demand will be satisfied by data centers already under construction with dedicated power infrastructure. At the same time, another 15 gigawatts can be supplied through existing utility grid capacity. This leaves a staggering shortfall of 44 gigawatts, or an equivalent to the output of 44 nuclear power plants. 44! 1 gigawatt in data center capacity could cost as much as 50 to 60 billion in total capex spend, according to NVIDIA's estimates. Assuming 60 billion per gigawatt, building the power generation and grid infrastructure to close this gap would cost $2.6 trillion. This excludes the additional $2 trillion needed to construct the actual data centers themselves. The AI revolution needs more energy. We talk about all this energy that's needed, right? These things are going to be energy hogs. I mean, Bitcoin, energy hog, cryptocurrency, energy hog, AI revolution, energy hog. Where's this all going to come from? Now, another better question is, do you think we can double production of natural gas in America? I don't know. I don't think so. I don't think we can. But yet we've got all this demand out there saying, feed me, feed me, feed me. I don't even know if coal can take up this gap. This is going to be a big one. And then I know that's the nuclear power. Everybody SMRs. I mean, we better get on it. We better get on it if that's the case. Grady, at the time, many were focused on the gold to SPX to break out. The Dow to gold ratio below showed much earlier what was happening. So this is the Dow to gold ratio. It broke out, back tested, and broke down. We're in the bull market, guys. We're in a gold bull market. I don't hear that many people talking about it. Maybe we're in the disbelief phase. Nobody cares. Nobody believes in it. But we're in it. It's here. And this is what it looks like. The ratio chart with technical analysis showing you that we are in it. And that's all I've got for today. So we're going to end it there. Give me a thumb up for the content, guys. Subscribe to the channel. Subscribe to the website if you'd like. Special that coupon code. And that's all I've got for today. So we'll catch you next time. See you later.